Hello traders, Mark Heareth here, Flipside Trading. It is Sunday, June 21st, and it's Father's Day. I hope you guys are having a super day and you're getting out and about and enjoying the day with the family. And hopefully that now those things are done, you're taking a look at the market and seeing what we may expect coming the next week. So the theme this week is really, I think there's a struggle going on between the Fed and the power that it has, and the whole saying "don't fight the Fed" versus what we're seeing in, with COVID-19 and kind of a resurgence, if you will, and how that is affecting the economy and what uncertainty that's bringing to the market. And I think there's kind of a delicate dance and delicate balance that the market's waiting for more information to make a decision. So we'll take a look at that, and we'll also figure out where those breakpoints are. In addition, we also want to look at, we talked about the new economy, based on COVID-19, and really thinking about it now as not so much a growth play, but as a defensive play. Because if the economy actually, starts to deteriorate, I think these stocks are going to get more and more exposure coming forward in these sectors, and so it becomes more of a defensive play. Just happens to be what's kind of considered a growth area. So let's take a look at that, and let's start with kind of the balance that we're seeing. So the key thing is the Fed's balance sheet is still increasing, right? We're, in that $7-8 trillion range. But the big headline that came out on Monday to really kind of, thwart this new thought of rising cases was the Fed started saying it was going to buy individual corporate bonds. So this is a change, right? The change started from, just buying broad ETFs. But now when you start buying individual issuances, you really take the risk out, and the Fed is starting to, really start to pick winners and losers, and so that is something that's a new capitalism, if you will, or maybe it's not capitalism at all. But so we always talked about don't fight the Fed. I think it's something we have to consider, but at the same time, we're starting to see this uptick in in cases, not across the country, but especially certain states. And some of these states with your larger populations, your Texas, your Floridas, your Oklahomas, North and South Carolina, and that daily uptick in the South and the West is really starting to drive some concern and uncertainty in the market. So much so it really doesn't make a difference what the federal government is going to do. Given that we are a consumer-based economy, it really depends what the individual businesses are going to do. And I think this is why, toward the end of the day on Friday, we saw such a shock in the market because, Apple came out and said, we're going to start closing, retail stores in these states because we're starting to see a detriment to not only our sales from a profit and loss standpoint because we're not getting traffic, but, the health of our employees and the health of the local population in general. So I think that's a key thing to watch. If we start seeing more companies, from a newsflash standpoint, deciding that they are going to, either shutter the doors or limit their economic activity, I think that's going to send shockwaves to the market and bring us lower. However, if things can stabilize and we don't see that and the power of the Fed keeps us moving, then I see us kind of bouncing sideways to up. And we'll take a look at that from a technical basis in a second. But the other big thing is China. Right, this is where everything started, and regardless of the politics associated with it, China has a authoritarian regime, and they're able to put in place, should we say, measures that would not be acceptable here. I mean, right, people won't even wear masks, for goodness sake. So can you imagine if they were actually quarantining in your homes and coming over and screwing your doors shut so you actually couldn't get out? That'd be total anarchy. But the key thing is that in Beijing now we've started to see some evidence of the virus having a second wave. It appears to be more of kind of outside folks traveling to Beijing, but they're to the point where they're going to a big lockdown, right? Canceling flights, closing schools, and if that happens back in the U.S., I think we'll see the market definitely take a second leg down. So let's take a look at where we think the trigger points are for that, and look at the charts. So without further ado, let's get to the technicals. Okay, so let's start here with the SPX. This is the cash SPX 500. And what we really want to look at is you can see that we have right here this zone, this kind of, I call it a value zone, where we've had inside days, day 1, 2, and 3, right here from this candle. And we haven't broken out, whatsoever. And we were looking potentially for a breakout of this associated with Friday, and being that it was, quadruple witching. And one of the things that we talked about is that the market was coiling. So we mentioned this on Thursday here in Twitter. And we were really, and there was a rebalance. And this rebalance, basically the indexes have to rebalance, but we didn't rebalance in March because of COVID-19. So the question was, how big was that rebalance going to be, and what kind of effect was that going to have? And we're always looking for signals in kind of the broader markets. In this case, we're looking right here at the currency market to see whether or not we can get an indication of what may happen. And you can see that we are right in this kind of, balanced value zone as well. And as long as we didn't break this high, that we were going to we were basically going to go sideways. And as long as we don't break the low and go back into value here, that we weren't going to be bearish. And basically we'll take a look at, and neither one of those happened. So the currency markets and the bond markets did not give us that preliminary indication or confirming indication of which way, things will happen. And if we take a look at this, let's go back to our charts here. Let's back to the other indexes. And so if we go back to, the NASDAQ 100 cash session, you can see that we've maintained the ADMA, which is the yellow line here. We're firmly within the channel, so we're kind of consolidating sideways, and potentially continuing this upward bullish trend. And again, I think this has a lot to do with what I call the new economy, in the sense that if we're going to see COVID-19 type impacts, that there are going to be certain sectors that are going to thrive. So it's something to really keep a look at. In addition, now if we go ahead and we take a look at the RUT, and that's the Russell, and we look at our small caps, you can see that the RUT is still lagging in the sense that we're still below the 200 moving average, and we're still, basically below the channel, and we have support here on the 50 EMA. So one of the key triggers is the RUT going to break the support in the 50 EMA? If that happens, I would definitely see the SPX start to pull down, but I would not be surprised to see the NASDAQ kind of, push upwards. Maybe not hugely, but still continue somewhere an upward trend as folks put money in kind of the new defense, which is basically these new economy sectors that we've been talking about. Because as you can see, if we go back to the S&P 500 real quick, here we go. The key primers that we talked about, what drives the S&P 500? Well, that's financials. So where are financials right now? Financials themselves, we'll take a look at. You can see, look, we're still beneath the 200 EMA. We bounced off of it. We're held here at the 50 as well. So that corresponds very, very well with talking about, with the Russell. And we have some room down here, all the way to the 50. But if we break that 50, there's no support at 23.14. You can see that things may start to pull the market down a little bit. The other one we always want to take a look at, of course, is the transports. And we take a look at the transports, and you'll see it's a very similar picture to the financials. Right, we're below the 200-day moving average. We got support here at the 21. Potentially, dropping back down to the 50. And then, of course, you take a look at copper from the futures perspective. And copper is a little bit more of a bullish story, which potentially lends some help out in the sense that we're within the channel. You can see we've got these topping tails. We're holding the ADMA, which really suggests some more consolidation, but potentially just a bounce back and forth between the 200 moving average here, the red line, and the top of the channel. So again, I don't think there's any clear definition of which way we're going. I would be, slightly bearish, at least on the S&P and the Russell. Again, with the NASDAQ kind of moving sideways to, a little bit upward. And let's take a bigger look at this from a standpoint of what we talked about from the sectors of the new economy. And let's go here and let's go to our new economy, sectors and ETFs that we've been tracking, and where some money may be put to use. And you can see here that here is the S&P 500, and that everything else above this line, right, we have been outperforming. So in all these areas right here, we have been doing a great job in outperforming the S&P 500. And I think that's going to continue because, of what we just talked about. And then even the sectors below, the energy sector, and the energy sector, it was definitely down, but at least you're not, that was the only one that was losing money. The other two sectors were making money. So overall, we're not going to get 100% winners, but it's definitely kind of showing that we're in that type of direction, and we'll kind of continue that discussion here in a broader sense. Is that if we take a look at what's known as our momentum stocks versus values. So values here at the numerator, momentum's in the denominator. And as momentum gets bigger and more money comes into momentum, then this line is going to come down. And so those momentum stocks are kind of represented by the new economy. And you can see that we have a new push even here to a lower low. Can it keep going? At some point it can, yes. And it will, but just like we talked about before, there's a tipping point, right? The SPX and the small caps, if they do start breaking those support levels, they will pull down even this new economy, right? You just can't escape it, and that's what we're looking for as a potential second leg down. So as we talked about kind of the main components between the transports and the financials, looking a little bearish, I think we're seeing, some other bearish indicators as well. And we take a look at here. Well, first of all, this gives you a better view of, I'll say, the consolidation that we're looking at, right? And we're looking for a breakout, upper and lower. But if we take a look at the advanced decline and the Keltner channels, so what we've seen is the advanced decline has kind of come back in and moved back within the Keltner channel. Now, does this mean totally bearish and to sell the house? In my opinion, no, right? We still have the 21 EMA with the Keltner channel, and the bottom of the Keltner channel see a bounce. Again, I think we may see, a drift, but in the SPX, but I'm not exactly looking for a total pullback until we see a break of the channel in the NASDAQ. The next one we want to take a look at here is what's key again in our overall advanced decline is the number of stocks that are above the 200-day moving average. So we were above that, and we were moving fine, and we were kind of really pushing. And then all of a sudden, we're back down below. And I think what this represents is the sectors of the economy most affected by COVID. And those are your airlines, your retail stocks, your financials, your materials, and your industrials, right? And so that is what's pulling this down and kind of represents this breadth component below the 200-day moving average right here. So at the same time, you can see we have a little pullback in the 50s, and that's to be expected as well. And we're just going to have to continue to watch that to see whether or not the S&P can hold those key support levels. And then looking a little further, we take a look at right here, we've had a little MACD cross, and basically cross below. Right, here's the cross below, but we are still well above zero. So again, it's not panic time, but it's telling us that we're in consolidation time. And that's the way we need to read the market, at this point. One of the key things that's also pointing to bearish is the VIX. We've basically, let's see if I can draw a decent trend line here. We've kind of broken this trend, right, to move higher. The VIX is an inverse correlation to the S&P 500, kind of indicating that we're going to have more and more volatility. So we have this, and now, based on the VIX, we have this kind of channel right here. Now we need to see which way we break, right? Will we break this trend line and come down and see the market start to move up? So will the power of the Fed, and the opening of the economy, overcome potentially what's happening with COVID? Don't know. But again, look at that trigger right here about 28 right here on the VIX. If we start breaking that and moving higher, we'll then definitely start tightening up and just being more conservative in new plays for sure. Now, on the flip side, we talked about copper, but we also talked about the Baltic Dry Index. If you remember, that index has to do with the movement of goods across the world. And 70% of the goods across the world are actually traded and they're transported via ship or container, and that is now pushed up and above the 200-day moving average. So there is some hope. It's not all doom and gloom. I would just be very careful in my SPX sectors and my small caps. I would watch those for a break below support, and then of course watching the NDX going forward to see whether or not it drops. And if it drops below that channel, and so let's go back to that real quick, and we'll just give you one more visual. So if we go back to the NDX, so if the NDX starts dropping below this channel right here, then I think that we may see on the SPX another leg down. And I think that leg down would probably take us to this support level here. Okay, at least as an interim basis. So that would kind of be, that target. So keep those in mind as we move forward. Look for definitely increased volatility, a lot of swings based on news, and we'll see what happens. One other thing I wanted to show you, the other thing that's kind of maybe skewing these technicals, at least from a price action, at the end of the day, could be the overall rebalancing. Let me go here to the SPX. I do want to go to a 5-minute chart real quick. You can see that, we had this, large type of sell-off here in the last, basically, 30 minutes of the day. And I think the key thing is here, usually you see this that happens, as part of rebalance. So could this be a liquidation break due to rebalancing? Potentially, yes. Okay. The only thing that, or not the only thing, but one of the key things that says it may not be all due to that, and it may have more of an impact on, should we say, based on COVID and the economy and what restrictions it may put on the economy, is what happened to, let's just take a look at kind of one of our, new economy stocks right here, and take a look at Netflix, right? So obviously, if the economy shut down and people can't go to movie theaters and sporting events don't happen, and folks are looking for entertainment at home, you can see that Netflix, really pumped here in this last 15 minutes, right? It had a big hammer candle, starting right here, and then boom, boom. So it does, I guess, indicate to me just a little bit more that the uncertainty due to the new cases or potential second wave is something that is really weighing heavily on the market's mind. So be aware of that. Enjoy the rest of your day. Thanks for spending a small time of your day with us here at Flipside Traders. Have a great one, and we'll catch you on the flip side.